So let's move on to the core of the event, looking at how Web3 technologies can help small and medium-sized businesses. As you've seen, these are our exceptional panelists. I will try to cut on some of the introductions at the beginning and focus on the content. But first, following also Donella's introduction, I would also like to acknowledge the Yungar people on which land we are meeting today and pay our respect to the elders past, present, and emerging. Uh, we're going straight to the content and statistics that are very important for this event. Small and medium-sized businesses. This is 99% of the Australian economy made of small and medium-sized business. As you see here, the numbers are from for small, that is from 0 to 19 employees, and medium from 20 to 200 or 199. That is a significant number. They altogether contribute more than 50% of the Australian GDP and employ close to 70% of employees. Now, altogether, that's a massive number. Only a tiny percentage of the big players are the big corporations, the big names that we know from advertising and from brands in our cities. But these are usually when we talk about small and medium-sized businesses, these are often the invisible, but the fabric of our society and economy that supports us every day with delivering fresh food, making sure that we get our coffee, our haircut, and it can function in society. Many of them, unfortunately, are not up to date with the technologies. And in the global context, that is very important, but also disheartening, because 90% of exporters in Australia are exactly small and medium-sized businesses. Um, so you see here on another statistic, what kind of exporters are these? Many of them are actually, excuse me, not exporters, but what are the key industries and sectors in the economy where we have the aggregation of small and medium-sized businesses. This is construction, professional, scientific, and technical services, rental and hiring, transport, agriculture, perhaps the one of the main one where we can have tangible goods being offered for export, but also healthcare, retail, and so on. So that's an interesting chunk, mainly focusing in Australia on services, agriculture, and trade. Um, the reason why we're focusing on this particular sector and looking at that from the perspective of Web3 technologies is that we believe that this is a perfect match of technology made exactly for that type of businesses. And the reason for that is that when we look at the Web3 broadly defined, and I'm aware that maybe not everybody is technical in the audience, hence we would like to offer a very basic introduction to understanding the concept. We look at Web3 as the next evolution of the internet, which is built on decentralized technologies, such as blockchain being the foundational technology. But Web3 is more than just blockchain. It is a combination of other technologies. For example, the Internet of Things, like all the devices that we have at home and they communicate, maybe also electric vehicles, artificial intelligence, but also decentralized physical infrastructure. That is the power centers, the data centers that are around the country, and also in the future, quantum computing to secure that network. All of those working together to make sure that we have a decentralized web, decentralized internet in a way that allows us for communication peer-to-peer directly without the unnecessary intermediaries. And that's quite revolutionary. That takes us to some of the foundations of the internet in the internet history in 1950s, 1960s. To allow for the peer-to-peer connection. So some people may be surprised when they hear, well, how really revolutionary that is. I've heard that comment earlier. We are communicating directly. Yes, it feels like we are communicating directly. It feels like when we're using Uber, we are doing a peer-to-peer economy on the one hand, but on the other hand, we are oftentimes omitting the big tech companies that own the infrastructure and usually take share out of our transactions, which is okay because they provide a valuable service. But it becomes sometimes problematic in international trade when that share is too much. For example, when you think about international remittances, which involve migrants, for example, sending some money that they earned very hardly to their families in developing economies. And if these are small transactions, maybe 20 or 100 dollars, the traditional financial infrastructure takes quite big cut from that transaction. That could be $20. So if you take 20 from 100, that's quite significant. Now, what could be done to reduce that big number to a smaller amount, maybe a couple of dollars, a few cents? And that's where Web3 technologies, as an example, may come handy to allow that more equitable and sustainable financial digital economy on a global scale. So that's what we'd like to talk about. If you have many more questions about the technical aspects, we will have several opportunities to ask those questions, and hopefully they'll be also fully answered during the presentations. As a result of those technologies, the impact and the positive effects of those technologies could be summed up in three key points that we would like to further expand on in our presentation. In terms of money and savings, these are faster and cheaper payments and access to alternative financing, especially in developing economies. This is also a greater security and trust in the system because all the transactions are recorded in immutable database. Hence, security is much greater than in traditional centralized databases. And thirdly, that is increased efficiency and transparency in, for example, supply chain management, which is highly relevant to our small and medium-sized businesses. So we will expand on those points in the presentation as we go. We know that on the one hand, these technologies bring great positive impacts and then a great advantage to small and medium-sized businesses. But we also know from research and various sources, for example, like the recent OECD report, showing that small and medium-sized businesses are not actually adopting those technologies greatly. To a great extent, that is influenced by inadequate digital infrastructure, simply access to fast-speed internet in rural areas. But also financial constraints, because many of the small and medium-sized businesses don't have extra cash to allow them for investment and training in those different technologies. Also, some of that requires cross-border knowledge and understanding how the operation of these different technologies works across borders. And finally, we don't have sufficient regulatory clarity that allows for the full global digital economy to function. So these are some of the challenges that we face. I would like to ask now our expert, that's Professor David Lee Kuo Chen, who is the chairman and co-founder of Global FinTech Institute, and also professor of finance at the Singapore University of Social Sciences, including many other institutions, academic institutions in Singapore and overseas, and founder and co-founder on many other institutions, and also one of the co-founders in the Western Australia Web3 Association, who's extremely generous in offering his time in his busy schedule to be here with us. So I thank you very much, David, for your generous time and insight. You are one of the most respected experts in this area globally, and we're very thankful for your time. I would like to ask you the four relatively straightforward questions, which I put transparently here on the screen that everybody can see, and maybe ask other questions if you have in chat. And if you don't mind, we would go straight because I'm aware that you have to go to another meeting. Are we ready? I think you're muted. Okay.
Right. Andrea, it's really nice to meet you and Donella as well. It's great to be here and hearing what you have to say about Web3. And hi, Donella. That there's so many things happening now all around the world. And I just look at your questions. They're all very, very interesting. I think you have answered some of them earlier on. But perhaps I could go slightly in more details, like some of the projects which are happening, because a lot of time people tend to think that Web3 are just about conferences. We go there and have parties and have discussion, but nothing really happens. But really, there are actually a lot of things happening at the governmental level, at the startups level, and even at the corporate level all over the world. And I think it is very promising for SME, in particular, where you mentioned two things, right? One is about international trade. I think international trade is something that is happening, and a lot of SMEs are trading globally, or their supply chain are from offshore, or they have to export their products. And Web3 applications is happening, which I'll give example later. But this is also tying in with same solution for SME finance, which includes financing and investment, as well as payments versus payment and payments versus delivery. So everything is a package. So we could start with an example of trade, which I think later our colleagues from Amper and Zcloak and so on will talk to you more about the kind of projects they're involved in, including data security and privacy protection. But I want to, in particular, talk about a few projects that we are involved in. One is called the Flex, Flex.sg, which is a website that we have started in Global FinTech Institute and working closely with different governments as well. And FLEX stands for FinTech Investment and Lending. And is about enticing investors to invest and also lend to FinTech companies that especially engaging in Web3 application for SMEs. And the thinking is that the major problem now in the world is SME investment and lending. And if the fintech companies who are not flourishing in that area, that problem will never be solved if it's left to just the traditional institutions, because the whole governance and the regulation and compliance structure have made this extremely costly. It's not that the traditional financial firms are not going into this area or resisting going to this area, but it's all the technology are not available. It's simply because I think there is no international coordination in a very untrusted element. And that's why Web3 comes in. Web3 function extremely well in a untrusted environment. And if you have an environment that not everyone trusts each other, and you have spent a lot of time to find out about the counterparty, then Web3 comes in very handy. So if you look at a lot of projects that are happening now in the world, especially the central bank digital currency, there's one particularly called Project Mariana, which uses the central bank digital currency. But at the same time, when it comes to Forex transaction and so on, they use what is known as DeFi, decentralized finance. So that means that there will be they cut off a lot of middlemen, especially in the financial sector, so that the cost is actually reduced. And because the ledger is on the blockchain, so there's also no counterparty risk. And because there's no counterparty risk, therefore there's no requirement to have huge amount of guarantees or so-called reserve or whatever to put aside, just in case there is a default of the counterparty. And that will lower the cost of lending and investment to SME. And not only that, it is also part of the corporate inclusion for SMEs, and especially in the area of payments. There are a lot of startups and a lot of payments company, unlike the banks, they are not able to join into the payment system. But because the Web3 technology with blockchain that eliminated the counterparty risk, so that the payments versus payment and payments versus delivery can be immediate, almost immediate, much faster than what we're used to, known as a real-time gross settlement system, where there's a time delay. So that helps financial institutions to cut off a lot of intermediaries, as well as the funding required to ensure that there's a counterparty assurance. So that's one very good example that you can see that the government are building digital infrastructure, such as Project Mariana, by Bank of International Settlement, which is the central bank of central bank, together with the French, Singapore, and the Swiss central banks. And then you'll see as well there are projects like Project Guardian, which try to tokenize as many assets as possible. And the advantage of that is that you have tokenized assets, and then you could do a lot of things with that. Okay, one of the projects that follow out from there is a project DESFT, which is DE stand for digital economy, SFT stand for semi-fungible token. And there's a project initiated by Monetary Authority of Singapore, working with Bank of Ghana. And what they have done is that they have created a ERC 3525 smart contract or wallet. And people who are not familiar with smart contract or wallet, basically it is just computer codes that are executed autonomously, and they are actually registered on a platform. So let me stop there, and maybe Andreas, you can jump in with some of the questions that you may have.
Okay, yeah, thanks, David. I think what one of the things that got my attention in how you spoke about these projects is that, which is perhaps not very common in many of the Web3 and blockchain cycles, uh, the great involvement of many governments in those projects. So we're talking about institutional adoption of blockchain or DLT technologies in building. I think there's no better word for that, but building a new digital public infrastructure for communication and finance. Is that your
Yeah,
perception?
yeah. I think you're spot on because we used to build roads, we used to build bridges. Those are hardware, but now with all the technology available, so government are focusing on a few things. One is what we just mentioned, software, so that this software can be or platform or protocol can be used by different government, so that and there's nobody really as the central authority that is having an entire say. Everybody can come together and improve on the coding. Everybody come together that they can actually work together. That's one part, which is brought about by the blockchain philosophy, which is also the Web3 philosophy. But there's also another reason, which you mentioned about what are the factors behind Singapore in leading this digital
Yeah.
transformation, is that we used to have trade agreement because they're physical trade. But when it comes to having to use all this technology for online payments, cross-border payments, and delivery, then really you are looking at cybersecurity, you're looking at who is going to store the data, whether there's privacy protection and so on. So from trade agreement to become digital trade agreement. So Singapore has been signing with a lot of different governments and initiated like RCEP, which is a regional economic cooperation agreement that they have, so that government can come together and decide where this data are to be in, and what are the procedures, what are the legal issues, because data are digital assets. They are actually equivalent to money that we are talking about. So we have to resolve those issues. I think Singapore has taken the lead in not only the software development, working with different governments and BIS, but also taking the lead in signing a lot of digital agreement, trade agreement, or digital economy agreement with many governments. So those are the thoughts that we have. Build public digital infrastructure as public good, and then go ahead with the trade agreement in the digital economy.
I think that kind of partly answers the second question and also relates to the comment you made recently during the conference last week in Singapore, suggesting that and rightly so that Singapore is taking the place of the new Silicon Valley in that space because of all the different initiatives, whether it's government but also the very robust ecosystem of small and medium-sized enterprises that are working with the government in public-private partnerships. Um, could you give us a little bit more detail why that works so well in Singapore and not in many other countries? What is the secret?
Well, I suppose Singapore is a very international oriented place. It's very global, right? We just released well, same as Perth, just release a population of 6 million, a percentage. I think more than half are born overseas, right? So the international culture is innate in Singapore. It's very, very similar to Perth. And also that because it's a country rather than it's just a state, so it has a lot of autonomy to negotiate with a lot of different countries that they trade, because everybody comes to Singapore because of international trade, because of traveling, and because we also speak very many different languages, and it's a melting pot for everybody. So understanding different cultures, different languages, crossing borders, having a big group of professionals, like we have International Arbitrations Center, which the lawyers actually work with international law. Every jurisdiction about finance, a Singapore lawyer must be able to answer any questions on the spot, whether it's about London, whether it's about US, whether it's about China, whether it's about Australia. Well, the professionals, as accountants or lawyers, they have to have knowledge, working with the partners in those countries. So I think professionally, those they are global in the outlook, and not just about Singapore regulations, just know about Singapore food, which is fantastic, right? Everybody likes
Yes.
Singapore food. Food itself is also of four different races, four different, you can have a mix of Indian food, Chinese food, Western food, and everything into one. So I think that kind of environment of a open mindedness has helped Singapore to become, and of course, it is small. It is not a threat to anyone, right? If you're a
Mm.
big country like India or China or America, then you want to take a lead to do something like that, then there may be some resistance, that it's not that you're not capable, rather than maybe people just don't want you to do it. So Singapore is privileged that it's just, so I call it a Web4 red dot rather than a Web4 center, because it's just a dot, it's just a node that's trying to facilitate, playing the role of facilitation, so that we can facilitate international trade, international finance, and also play our part. I think the other one very important is that I always feel that why Singapore is so blessed is that it is always looking into solving global problems, trying to solve global SME problems, trying to look into sustainability, trying to make itself relevant in trying to address international issues. I think those, and then for that, you attract the right kind of professionals coming to Singapore, having, like yourself, having the same sense of mission to make it work. It is not easy. There'll be a lot of obstacles, but you tend to attract the type of people that want to solve the problem for their own next generation or their grandchildren rather than themselves. So I think Singapore is blessed in that sense, that since there is destined to do some of this work, then naturally is being blessed.
It's a great summary of a country. It's in itself, if you compare other countries to companies and the size, you can think about maybe US and China as multinational corporations, and in this sense, Singapore will be like as an SME. But I like how you highlighted the fact that it is very what are the important factors, ingredients. It's a multicultural diversity, the openness to that diversity, and not being a threat to other countries, and yes, extremely talented people and committed to a certain mission. So it's wonderful to work with colleagues from
So
Singapore.
I suppose it's so because that you have to survive yourself, right? You don't have a domestic market.
Correct.
You don't have a
Yes.
mining sector like Perth, that you can lie flat and enjoy yourself if you want to. But of course, people don't want to do that. Everybody wants to have something to do. But in Singapore, nobody can do. Nobody is privileged to do that. There's no natural resources. There's nothing. It's just a small red dot. Even water was imported a lot. So whether you like it or, it's like the whole place set up for Web3.
Yes.
Web3 is about people coming together.
Yes, and working together.
With, everybody need not trust each other. They can come from different culture, different background. I may not even know who you are,
Correct.
but then because there are rules which are decided by majority of us that this is how it should work, and it's being coded, And if you like it, you bring your own computer, your computing power, and your electricity to come and join as a node, and then you contribute to make the whole network grow. So
That's
Singapore is
wonderful. Yes.
actually set up for Web3 because that it has to survive. So naturally, it become a Web3 or Web4 red dot because that's how everybody is being brought up. That you have to survive, and you have to accept people that
Yeah,
you don't trust. You have to accept that people have different culture. So Web3, you don't have to trust anyone. That's what Satoshi Nakamoto has done. Because
that's correct.
the cost of finding out your counterparty is is too high. And therefore, there's a lot of trusted third party being set up, like the banks, like the insurance company. They will continue to exist. But that require, if you want to expand this in a short time period and allow your marginal cost of expansion must be zero.
Yes.
And that's
Uh,
where people bring their own resources, their talent, and to come and join as a node.
And
And
that's
this is what
that
we're doing.
yeah, and that's true. It's a really like a microcosm of the world. Now, in that you mentioned people bring energy, for example, to Singapore, and I know that Singapore probably it's not the most sustainable place in terms of energy, and that's perhaps what Western Australia and Perth could offer. Do you think that there is what do you think about the relationships between Western Australia as a powerhouse of energy and in energy in transition to renewable energy, and Singapore and other parts of Southeast Asia that are with a growing digital economy are very energy hungry. Whether we talk about blockchain or AI, how do you see that the relationship, and in particularly from the point of view of small and medium-sized businesses?
Yeah, a lot of people from Singapore treat Australia as a second home for good reasons, right? And it's just no surprise that you want to become a digital economy. Electricity is very important. So you have to have low cost electricity. So you can really see that there is initiative from north of Australia to supply electricity to Singapore, right? We're also talking about hydrogen from Perth and many initiatives especially Western Australia, North and Western Australia that is much closer to Singapore. So I would expect because of the digital economy booming, the relationship between Perth and North Australia will be much closer as time goes on, because there'll be a lot of projects ongoing, and there's no short of natural resources in Perth. There's no short of sunlight, no short of wind power, and and I'm sure everybody's thinking about how to bring all this energy to Singapore, and it's already started. I think I mentioned about the project some
Correct.
time ago that this is started, and I don't think it will stop. And I could only see Perth and Singapore getting much closer as time goes on
It's a
because of
wonderful
digital
news.
economy.
It's a wonderful
Yeah.
news.
And also because that I think there's a desire for Perth to diversify its economy from just purely mining to also in the digital economy. And I think it makes perfect sense to work closely with Singapore.
That's a wonderful news, an opportunity for a small, medium-sized business, even local little farms. If we think about decentralized physical infrastructure network, putting, for example, solar power together and being able to use it, or computing power and data centers in a decentralized way, this could potentially be a great opportunity for some of the small and medium-sized businesses to uh, diversify
Yeah,
their.
I think in the last WA Web3 conference that we have, if I remember correctly, the Chief FinTech Officer mentioned a lot about Perth in the quantum computing aspect. And
Correct.
also, I think he particularly mentioned about the kind of talent and also resources that Australia have in helping to load. Just one example that he raised that really made impression on me is that in Perth, there are technology that can lower the temperature of all the computers. So you have a cloud computing center. Some of this technology, the liquefied coolant can actually help a lot and is highly in demand. So I think there are a lot of things that Singapore are looking into, and Perth is certainly one area that for the digital economy is one big area that Singapore explored.
I think maybe that's a good way. I am aware of your time limitations. A great way to close it, and I'm very happy that could present a little bit different take on Web3 and digital technologies because we look at this from a much broader perspective of culture, global connectivity, and politics, even food. But importantly, from the perspective of the digital and physical infrastructure that is so important and often overlooked when we talk about digital economy. And this is a great opportunity for both Western Australia and Singapore to develop further collaboration, especially for small and medium-sized businesses.
I
Would there
just
be
have
anything? Yeah,
one last point to make is that if there are a lot of SME out there listening to this, uh, uh, most of the SME from our perspective is considered as Web2 company.
correct.
So the potential from Web2 company transforming themselves to Web3 and reaching out to the rest of the world is there's huge potential. And I suppose that's why WA Web3 was being set up to reach
Correct. So
out to
it's
all SME and startups and provide solutions to Web2 companies so that they could, as SME, join a network of Web3 that the world is the market rather than just your neighborhood or just a state of WA as your customer. So I think that's what I would like to end with, that transform yourself from Web 2 or Web 3 and the technology are available and your panelists are all there. So later I'm sure you talk more about that. So I'll leave you with that, Andres, for thank you very much
thank you for
for
your
the
time,
yourself
David.
for
Really appreciate it. Thank
inviting
you
me.
so much.
Have a good
Thank,
discussion. Thank you.
thank you,
Thank you.
thank you,
Bye,
and bye.
everybody. Bye.
Bye. Thank you, David. That was really insightful, and especially when we look at the opportunity to look at Web3 and small and medium-sized businesses from a different perspective, not something that many people usually expect from the point of view of infrastructure and connecting Perth, Western Australia, to the whole market of Southeast Asia, which is about 600 million people. That it is a great opportunity to truly diversify our economy beyond what has been done. We have incredible talent in Perth, a great government supporting those kind of initiatives. So I think that's a great opportunity also for small and medium-sized businesses. And if any of them are watching us tonight, please reach out to us. That's our mission and purpose to help with that transition and education. I would like to now move to a great case study that helps us understand what that really means in practice.
Excuse me, Andre.
Yes.
There are some questions in the chat there in the Q&A.
Oh,
I
okay.
don't know how you wish to handle that. Um, in
Okay.
terms of, there's one
Yes,
question
please.
that says, David, thank you for sharing your thoughts yet again. What do you think is holding back the WA government or even the Australian federal government to legislate Web3 law so the
Hmm.
country can move forward with developing new technology and applications for our citizens? What is
It's,
your view?
I think I'm not sure whether David still would ask because I'm aware
Oh,
that
I
he had to
see.
run at 3:30 because we had a little bit of delay, so he may not be here to answer. But we have Belle, who is a legal expert, and
Okay.
I think that will be one of the questions that Belle may be able to answer later on in our presentation. So
Thank you.
maybe even Effie, who is an expert in that space of digital money, stable coins, maybe she'll be able to give us some insight on. Belle, would you like to add maybe if you are here, would you like to comment on
Um,
that question?
yeah. First of all, I have to say we're not super fast in making new regulations, but Australia is a faster follower, and we are. I know the Treasury Department's the ASIC, so they are making movements. They've done there's various consultation papers in the space, so they are trying to make new laws. Especially in especially in the exchange space, among other things. So an ASIC set up a new department called Digital Asset Department. It's sitting on the market. So it's a new department purely focused on digital assets, and they had a first conference not long ago, and inviting people to participate, and they're very transparent about their intention, their challenges, etc. So I think being a lawyer, I wouldn't say we are making huge progress. There are still constraints, but I would say, the government is fully aware. We are making progress.
Yeah, we're not behind, and that's true. But the government many times reached out. I mean, Treasury at least especially reached out to us and myself for consultations. They're very transparent in how they approach the regulations. So I think we're in a good track. We have to catch up on maybe places like Singapore and maybe walk that path together. So now I'd like to move to a Ify Dimitropoulos, who is the CEO of Australian Stablecoin. That's the digital Australian money. And I know that many people are aware of cryptocurrencies, but maybe not everybody is aware about the differences between cryptocurrencies and stablecoins. So I think Ify would like to tell us a little bit more about what they are, how they work, and what they can do to improve the lives and businesses for our small and medium-sized businesses. Ify, the floor is yours. Thank you very much for being here with us.
Terrific. Thank you so much for having me. And thank you to, sorry, let me just allow for 1 month. Right. Okay. Can you see my screen? Is my screen being shared?
I need to stop sharing. So could you try now?
Oh, okay. Sorry, just give me 1 moment. I'll try that again. Where did we get to?
Should be.
You are screen sharing. It says I'm screen sharing, but is that not the case?
I don't see that.
See it. How about now?
Yes, I see it, Andre.
Oh, you do? Okay.
Yeah, I see the screen.
Okay.
Perfect. And I will make it bigger so that it's easier to see. So give me 1 moment. So there you go. I've entered into. Is that good, Danella? Yep.
Yeah. Good? All good. All good.
Okay. All right. Thank you so much. I appreciate being invited to give you a little bit of an update on where some of Australian companies are heading in terms of digital innovation. And as David Lee said, yes, Singapore is way ahead, and as Belle highlighted, Australia tends to follow the rest of the world in regulations, and in some ways that's not a bad thing, right? It's something that we don't want to rush into and be at the bleeding edge where we could get it wrong. So we can look at other jurisdictions and see how they approach things, where mistakes are made, and how we can do better. So it's not necessarily a bad thing to be a follower, but I will tell you that most of us in the industry are very keen to get a little bit more regulation clarity, which we think is coming. So we're really looking forward to it. So much like many of you on the call today, we ourselves are a small to medium enterprise. So whilst we are a company within a publicly listed fintech payments group called Novati, it's not an overly huge company. It's 70 people. And AUDC, the entity, we're only 8 people. Okay, and so what we are trying to show here is that you can innovate within a small environment, within an environment like Australia that isn't, super at the cutting edge of regulation, but certainly have a wealth of experience in payments and being first, right? So, iPhones come out, we're the first. New televisions come out, we're the first. We're the first at doing a lot of things, but we're not the first at doing stable coins. And so let me give you a little bit of an introduction to what stable coins are, and particularly how they can be used in your businesses today, and how we see and hope that they can be used in businesses moving forward. So as Andre kindly mentioned, I'm the CEO of AUDC. I've had almost 2 decades of experience in fintechs, predominantly in alternative payments. What do I mean by that? Well, guess what? Your Google Pay on your phone and your Apple Pay, up till only a few years ago, they were considered alternative payments. Why? Anything that a bank did not provide, or a Visa or MasterCard scheme did not provide, was considered to be alternative payments. So my experience has been in everything from voucher payments to prepaid cards to QR codes to barcodes. And so for me, it was a natural progression to lead a new development in payments within the blockchain space. And when I say new to Australia, because it's not a new thing. It has been, stablecoins are prevalent across the world, predominantly in the US dollar market. And I know we will talk a little bit about the importance of why a US dollar stablecoin is important in the market, but why there should be an Australian dollar stablecoin as well. So AUDD is Australian Digital Dollar. AUDC is simply the entity that is operating that digital dollar. And as I mentioned, we're within the Navati group. So the agenda looks a bit long there, but it's actually not. I'll try to keep it brief so as that you can all get home to dinner and not have your brains completely overwhelmed with what I'm about to share. So let's understand some of the basics. So what are stablecoins? What exactly are we talking about here? So we're talking about a digital representation, a token that is equal in value to a stable asset. And what we mean by stable assets is a dollar, gold, a commodity. So those are things that pretty much sit at a stable level, right? So if you look at that little chart below, you'll see this little red line across the bottom, which pretty much is sitting at a straight line. When you're talking about volatile assets or crypto assets, they go like that, right? So you can see that blue line there, and that is a BTC, a Bitcoin tracking against a US dollar over time. Okay, and so when we are talking about payments, well, do we really want to be doing payments in Bitcoin when today we're making a payment that's worth $10, but actually in 30 minutes time it might be worth $40, or it could be only $3, right? So what we are doing is dealing in a token that makes a lot more sense in business, and it makes a lot more sense in terms of transparency. So that's what the key characteristic is here, the stability in value compared to other cryptocurrencies like Bitcoin. So it makes them reliable for transactions. Now, tonight we're only really going to focus on one type of stablecoin. There are a number of types of stablecoin, and people might talk about, oh, but stablecoins depegged, or oh, stablecoin, there was a collapse. We are not talking about the stablecoins that are algorithmic or over collateralized. We'll be talking about fiat collateralized. Fiat meaning cash money. So sovereign currency is also referred to as fiat within the ecosystem. So we're talking one-to-one dollar-backed fiat stablecoin, and that's what an Australian dollar is, which, as you can see in this illustration, 1 AUDD equals 1 Australian dollar, and it will always equal 1 Australian dollar because that's what it's representing. I've put a couple of other little symbols down below the Australian dollar version, which names you may have heard of: US Tether, USDT, USDC, Euro C, and other stable currencies that are fiat backed. The ones on the left that you can see down there, or maybe I'm supposed to be pointing that way, but anyway, is the petrodollar and XAUT, which is a gold-backed stablecoin. So there's a gold-backed stablecoin. So we talked about collateralizing with stable assets like gold, or with oil reserves. So the petro coin actually doesn't exist anymore. It was delisted at the beginning of this year, but it was actually the equivalent of crude oil in Venezuela. And so one petrodollar represented one barrel of crude oil, and so there was that stability in that. So I did very briefly mention over collateralization. We're not going to go into that, but it's basically saying that instead of a dollar, it's backed by other cryptocurrencies, and so they do all this balancing act to try to make sure that it equals that it equals $1, but they basically have to put in more assets to make sure that there's not that volatility, so that they can try to remain some stability. And then the algorithmic one, look, I'm going to put my hands up in the air just like my little screenshot is there, but that is all about maths, and I'm sure there are plenty of other maths wizards around that can explain those to you, but basically that's not the game that we're playing, because we don't, we want to provide a little bit of surety and protections for the consumers. So what I'd like to illustrate to you here is this isn't a fad. You've all probably heard the fact that cryptocurrencies are here, Bitcoin's here, everybody's got Bitcoin. The fact is, in Australia, 1 in 4 people have some sort of digital asset, or have invested in one, transacted in one, hold one, or the other. So 1 in 4 is quite a high number. I'm sure if we put our hands up in here, we would find that the answer is probably 1 in 4 has transacted with some sort of digital asset. In the world, the other stable coins, as you can see here today, well, actually, this is a last week figure, but it's $170 billion worth of a space of volume of transactions in dollars. This is US dollars rather, that is being transacted. And if you add that USDC and USDT figure, so we're talking US dollar stable coins, as you can see there, it's over 90% of all of the stable coins in the world that are being transacted, and there is 90% of them in US dollars. Australian, Euro, Ghana, Colombia, every other stable coin falls into that other 9.7%. Now, at any given day, that number could be 98% US dollar stable coins and 2% us. But obviously, if I asked around the room today to open up your wallets or to open up your app, your banking app, and ask you, do you have US dollars in your wallet? And did you go down to the shop and pay your petrol with US dollars? Your answer would be no. I'm almost certain of it. I would stand to be corrected if somebody said so in the chat. But this is why we are saying, well, you know, just like Australians don't use US dollars in their day-to-day transactions and in general their business transactions, we should enable the economy to move into the digital space easily and quickly by having an Australian dollar version of a stablecoin. So let's cover how do stablecoins work. So we talked about the fact that they're Australian dollars backed one-to-one by fiat currency or sovereign currency or cash. The stablecoins, in our instance, are on blockchain technology. So one of the beauties, or many of the beauties of having blockchain technology is that the transactions are recorded on a ledger, they're secure, they're immutable, immutable meaning that you can't change it, it happened, that's it, done. And so having the ability to see those transactions on a blockchain actually enables you to sort of say, well, hang on a minute, you know, I see that I've sent Andre money in my account, but it hasn't, I can't see that it reached his account. In blockchain technology, you can actually do that. Right? I can send a transaction to Andre and I can see that I sent it to him. He can see that I sent it to him and he can see it in his account and I can see it that it's gone into his account. So there's that transparency, okay? Some of the other key features are the one-to-one backing. This is an important one. Right? This is an important one because as Belle mentioned, as Andre mentioned, as Dave Lee mentioned, we don't have extremely robust, clear regulations on digital assets and stablecoins in Australia. So we took an approach of basically saying, well, if somebody wants to use it, we've got to help them trust that this is a system that works and that we can engender that trust by showing that there is one-to-one backing. So when you say, I want one AUDD, we want to show you where that one AUDD sits in reserves backing it. Because if you say to me tonight, I want 100 AUDD, and then 10 minutes later say, well, actually, no, I want it back. You want to be assured that that $100 is sitting there waiting to be given back to you. So one-to-one backing is important. Minting and redemption is basically about, can I actually mint, you know, go down to Australian note printers or go down to the Perth Mint and actually mint an Australian dollar. We can do that instantly on the fly, and all that it requires is a trigger to say money is in the bank account, mint a coin. I want to burn a coin. I don't want that coin anymore. I want my cash. I need to be able to redeem it. The importance of having a one-to-one product in an Australian market and in the global market from the minting perspective is that there should be no fees, right? We should be able to say, well, I can transact with $1 and it costs me nothing. So I want to be able to also transact with an Australian digital token and cost me nothing. For the purposes of this exercise to explain about asset segregation very briefly, it's basically saying that when everybody, you know, gives us $100 million to mint 100 million stable coins, that money is not about paying FE and paying for technology and paying for rent and all of the rest of it. That 100 million is only for minting of that stablecoin. So we segregate those funds into a trust account that says, this is where your money is and this is where your coins are. And those two have nothing to do with running the business or making a profit or trying to get fees or any other things. So they are some of our obligations are that we are there to redeem when you ask us to redeem them. If there is some suspicious activity that goes on that we can see on chain that doesn't align with anti-money laundering and counter-terrorism financing regulations, we do have the capability of stopping things like that. And then the obligation of you, a stablecoin holder, is basically that you will use it for legitimate use. You're not going to buy it and then go off and do something dishonest. So there are agreements to terms. I'm scared of showing this because it looks way too technical, but basically what we're talking about here is a customer has cash, and ultimately they provide that cash to mint a token. We segregate the funds, and then ultimately, once we've acknowledged that those funds have been segregated and taken, then we mint a coin. And then in reverse, it happens the same. So basically, there are a couple of parties in there, but essentially, I don't want to go into that detail because, but I would be happy to share that, Andre, with whoever requests it later as well. So what does it mean for you as a business? Why a stablecoin for SMEs and exporters? Well, it means that you can engage in faster transactions. And I'll visually show you this on the next slide, but a traditional cross-border transaction, and I mentioned, a transaction before about if I sent money to Andre, but now let's say I'm going to send money to David Lee because, he's currently in Shanghai. And I'm doing this because, I've got a cross-border trade that needs to happen. If I do it traditionally, it can take days. It can take multiple parties, and I'll show you a SWIFT transaction compared to a blockchain transaction, as I said, visually in a moment. A stablecoin transaction, we can settle in minutes. What else? Lower costs. So in terms of the fees that are charged when conducting blockchain transaction, because there are less steps and fewer parties involved, inherently that means that there are lower costs. Reduced currency risk. What am I talking about there? Well, if I lock in a contract today and the currency between Australia and let's say Colombia is such today, and then tomorrow it's such a volatile thing that it changes, we've got a bit of a problem. When we're using stable coins, we can lock in at a stable coin rate and make sure that that again, not multiple parties are taking part in that currency play that people make money out of. Accessing new markets. I mean, I think that this is a really key one. And a couple of partners on the phone, including Bill and somebody from Ample FinTech, can demonstrate and illustrate through a transaction that was done with the Bank of Ghana. Ghana has, a highly unbanked, an underbanked environment, but having things like digital assets rather than having to deal with traditional banking, you can actually participate in the ecosystem and obtain new customers from other parts of the world. So actually, I'll come back to this one because I did want to show you this this illustration of a cross-border trade that can happen today. And I get very frustrated about this, and we have a case. We actually have a specific case study that talks about a $500,000 Australian trade into US that took 8 business days, or that took probably 5 or 6 corresponding banks in between. But let's talk it through, right? So you're a trader and you sell, you actually need to get money into someone else's bank or vice versa. Once it leaves your bank account, say goodbye to it until it gets to the other person's bank account, right? Because you don't have visibility of this. You don't know that the sender's bank has to send it to a local correspondent bank, and then that correspondent bank needs to send it to another international corresponding bank. And then if they want to get it into Australia, there's another party that's involved. And by the time it gets to you, let me tell you, those 5 other parties in between have been making money on the overnight money markets. They have been playing with your money, and you just don't know where it is because all you've got is a screenshot that you sent it. You've seen it deducted from your account, but that's as far as you go until the other person can confirm either via email or WhatsApp or wherever else they're going to confirm, say, yep, I've got it. In the bottom row here, what you can see there is you can do that in 2 steps, right? So you say, I've got local currency. I actually want it for the other currency at the other end. I go into an exchange environment and I can actually make that happen in 1 step. I will actually hopefully have time to show you how it could work with an AUDD type of trade. So Stablecoins for us, we see all of you in this room are participating and can participate in these ways. So cross-border and remittances, when you're doing trade across jurisdictions, so outside of Australia, this enables you to do it 24/7. So it doesn't matter that the bank's only open 9 till 5, or that you might have Pay ID, but Pay ID is only relevant in Australia, right? You can't make a Pay ID or an instant payment to somebody in another country. You can do so with systems that are operating with stablecoin environments and payments. Treasury management, that is basically something that you can do by holding your financial position in Australian digital currency rather than having to hold it in, let's say you transact on a regular basis with another country, and you kind of go, oh, look, I'll hold some of my money in USD so that I can have easy access to pay it. Well, why would you do that and worry about the volatility of whether that is going to go up and down? Instead, hold it in a digital asset that can be instantly transacted. So you can use it for trade finance, where that can be peer-to-peer, real-time costs. Again, we talk about reducing those intermediaries. What we're here today, of course, Web3 ready. So it is programmable money. It can be used for trading, lending, yield farming. Not a stable coin, not in Australia yet, but there are parties that can actually participate in those activities. Currently, the regulation in Australia does not allow for that to occur. And as I mentioned earlier, you can access, international merchants can access Australian markets very quickly and easily by having access to stablecoin payments. So another example that we can very quickly talk through, because it's probably a little bit even deeper, because I think many people need to actually just start to make a start. But ultimately, all of these activities as a trade settlement can be put totally on the blockchain, and a DeFi trade, so as Dave Lee said, decentralized finance trade settlement can occur on chain in only a few steps. So again, I won't go into detail about this because I'd rather give you a little bit more of an intro on how you can actually start participating in a stablecoin environment. Many of you might have overseas workers that you either engage with, on your properties in Australia, or actually outsource to workers in other countries, and you could actually do instant settlements into their wallets directly with stablecoins. So that's another a thing that small to medium enterprises can take advantage of by using stablecoins and stablecoin payments. So I'm not going to go over this because I know that Belle's going to touch a little bit more on some of this, but basically we believe that regulation is important. Why do you need to be aware about regulation in this space? Because currently you're involved in the traditional finance with banks, traditional insurance companies, all of those sorts of things, and they're already very well regulated. So there are robust protections for consumers. There are very known quantities by your tax advisors. Everybody in the ecosystem is up to speed with where everything is in traditional. If you start engaging in Web3 and stablecoins and crypto assets and digital assets, you should and you will need to bring yourself up to speed to understand how your business should participate with stablecoins and cryptocurrencies. Speak to your tax accountants and see, are there any implications for you for participating with digital currencies? How does GST take effect? Where does capital gains come in? As usual, just like traditional ways, in the Web3 and stablecoin and digital asset space, record keeping is paramount and important. And of course, being on the blockchain makes it a lot easier. So whilst, this is not, Andre basically did say to me, don't you be promoting your products. I'm not going to say, and there's the disclaimer down the bottom, don't participate in this without being fully aware of what you're participating in. But basically what I wanted to illustrate here is, if you want to get started with cryptocurrencies or stablecoin currencies, I would say to you, when dealing with a digital asset, it is easier to understand that $1 equals $1 in a stable coin rather than a Bitcoin. So if you want to play or practice or pilot a transaction, it is a risk-free way to do so. Why I say it's risk-free, as we said, if you play with your $10 and you want your $10 back, you get your $10 back, right? So it's not something that you're going to get into there, lose money. You're also not going to get into there and then, find out 3 weeks later that you're a millionaire. So let's be clear on that. Okay. So, so yeah, maybe there's someone in there who might have done that. But you can get an account, and you'll see that. Look, there are things that mimic the traditional system, and that is that you will need to do due diligence. So KYC, know your customer. You will have to, give us information about yourself, and register yourself in such a way that we know who you are. Okay, so let's be clear. This is not a dark web type of activity. This is not something that's scary. You're going to go home and you're going to do this activity, and you're going to be, some hooded person. You're not. This is very above the board. So, and as I mentioned, you start small. You learn with experience. You have a bit of a practice with that. Speaking of piloting and starting small, we are participating currently with some very important partners, as you can see there on the side, the Monetary Authority of Singapore, Ample FinTech, Proxtera, Liquid Group, StraightsX, and ourselves, all participating in a pilot that is working with purpose-bound money. And in the example and in the pilot that we are participating in, we are talking about an Australian seller selling products to a Chinese buyer. And what we are aiming to show with this pilot is that it can be done all on chain under that ERC 3525 contract that Dave Lee mentioned, and that all of the process of initiating a trade and transacting, the FX associated with it, all of that is abstracted from the buyer and the seller. The buyer buys something, the seller sends something, and in between, it all happens on the blockchain and it all happens seamlessly. It's happening with stable coins. We hope to show the results of that pilot soon, and bring that to you possibly at another stage.
That would be great. That would be great if you can share. And I think Aparna, who is already with us, may share a little bit more detail about it. Yes. And also Bell and Xiao, that would be great. But if I being more aware of the time, if I can ask a question here, or maybe just make a comment on it, because what you showed is first of all, it's a regulated product. It has no risk of volatility as other kind of investment. It's not necessarily an investment, unless maybe if you approach it from a different jurisdiction, that'd be a way of kind of investing in a stable asset. But it has that kind of stability. It is regulated, so it has minimum risks, and can make the life for digital trade and global trade much easier because of the faster and simpler payment. And although you presented a quite elaborate way how that works in practice, looking at the technical part, the buyers and sellers or the users don't really engage in that kind of technical. They're not really required a very sophisticated knowledge, right? So it's very kind of seamless transaction as using any other form of payment.
That's absolutely
so all the technology happens in the background, right?
All the technology happens in the background. I would love to very quickly share, if I can, if you allow me to do this. So can you see this extra screen? This is basically, let's see if I can make it a little bit bigger. What I'm basically doing is showing how simple it is to make a digital asset transaction. So I'm basically in the Get AUDD platform, and I'm showing that 170 digital asset representation is of Australian dollars. I'm now going to go and buy using $10 of my Australian dollar money, and I'm going to buy $10 worth of AUDD. You can see here, there are no fees. I'm spending $10, I will get 10 AUDD. It's as simple as what I'm showing you right here, okay? So, and here is a list of what I just did. I just exchanged AUDD. So you saw that my Australian dollar balance went down, my stablecoin balance went up, and in my whole wallet environment, I've got $239.98. Here I'm showing you how easy it is to make a deposit from your Pay ID, so directly from your bank account. And if you wanted to withdraw, you can actually just withdraw it directly back to your bank account by just, selecting the bank that you've got there. So in my case, it's Bendigo Bank, and I'll just confirm that transaction, and I will get $10 back into my bank account. Okay, so remember I said I wanted to buy $10, but I also wanted to burn it
Correct.
and give it back to myself.
All
Okay,
right,
so that's the easy way to do
that
it.
looks really easy. And one more thing, I want to congratulate you, just in the context of our webinar today, that you are a very successful innovator, a small, medium-sized business, a
Yep.
startup, probably past the startup stage, right? You're more of a kind of scale up. Uh, or are you still a startup?
Hopefully,
Hopefully,
yeah.
yes.
Look,
Well,
yeah. Look,
uh,
we're seeking investment like many other companies, but yes, we consider ourselves a startup to scale up is where we're up to. Yeah.
Right, a leading innovator in the fintech space in Australia. Very proud to have you here, and I'm wishing you great success in the future. So thank you so much for your time.
My
We're moving
pleasure.
on.
Thank you so much.
Likewise, moving on now to a presentation by Aparna from Proxtera, who will give us a little bit more detail on how that global trade works from the perspective of a global trade platform. Aparna, do you need access to any screen share or?
I think maybe Andre, in the interest of time, I could help you save some
Good.
and maybe talk through because I'd like to thank Effie. She's set up beautifully for what I'd like to say next. So hello to everyone. My name's Aparna. I represent the commercial and partnerships arm of Proxtera. We are a Singapore-based tech company which is funded and supported and even partly owned by the Singapore government. And we have been put together to facilitate cross-border trade for SMEs using trusted credentials actually for fulfillment and to build trust across borders. So specifically coming to what we're talking about today, and especially the stablecoin trade in Ghana that Effie mentioned, Proxtera was actually the trade platform that helped to facilitate. So we are working with Ample FinTech and Effie to see the other use cases, right, on how we can settle payments for cross-border and how a digital trade platform like ours can support. So the problems that Effie's brought up that SMEs deal with every single day for cross-border trade in almost all countries that we talk to, and we're in about 9 countries, is this. It takes too long for me to pay. It's too expensive for me to pay in traditional methods. And I don't have access to US dollars. So access to US dollars, which is the default currency for all global trade, is a real structural issue. It's something that central banks are trying to solve. And all of us in this community can perhaps chip away at that problem a bit by approaching it in the innovative way that Effie has just explained. However, there is a few things that maybe as an entire ecosystem, we have to be a bit more aware of. So for the trade that Effie talked about earlier, the ones that we're trying now, there is a piece to explain to the SMEs on what exactly we are up to. So I think, Andres, as you rightfully said, right, on the surface, it looks fairly simple for the SME, like nothing has really changed. But there are some real deep-seated fears that SMEs have, which perhaps might prevent us from making this a very scalable opportunity. To start with, am I doing anything illegal? That is a very real fear that SMEs have. I'm not very sure, how does this actually work? We unfortunately don't have a lot of SMEs in places like Ghana, Rwanda, Cambodia, India, or even China that understand digital currencies. For them, whether it's crypto, blockchain, CBDCs, PBM, everything is one gigantic bucket that they find risky and that they're worried about. So how can we help them overcome that? Is there an education or a simplification piece that we need to run together? So we do a significant amount of handholding and education with the likes of Ample FinTech as well for the SMEs that are participating in this test trade. As a trade portal or a platform, we are more than happy to have these kind of solutions to settle trades. We find that over 40 to 50% of global trade falls through simply because there is no way to settle the money or it is too expensive to do so in the current traditional method. So the first point is really about making this an education-based approach. What do we need to do so that SMEs are comfortable enough to mass adopt this as an alternative way of payments for even local or cross-border settlements? Which leads to the second part. What role does the government have to play in this? So Professor Lee touched on it. There was commentary about Australia specifically and its policies. I think sitting in Singapore, we benefit a little from the foresight of the policymakers here. But policy is a real deal. SMEs, when they ask you, is this legal? What they're really asking you is, will the government say this is fine if I go ahead and use it as a payment? Which basically is asking, is there an underlying policy that supports this, or an underlying policy that tells me how to manage the risk associated with this method of payment. So in the example of the Ghana trade that we talked about earlier, where we used the Singapore CBDC and the Ghanaian ECEDI, there was a lot of involvement from both central banks because they understand that if you are asking SMEs to do business differently, you have to cover for their risk from a policy point of view. So perhaps one discussion that we as this community that understands the need for this technology can do is, can we take this up to policymakers and say that, look, you got to simplify this, you got to have a policy that helps de-risk this, and you have to make it known and sort of propagate it across the SMEs and across larger organizations so that they actually adopt this technology. So if we look at the adoption of any major disruptive technology in the world, right, when we started with the humble pager, which has been unfortunately in the news of late, all the way to Web3, the mass adoption is not possible if we don't have some sort of a policy, a safety net to fall back on. When you take this to a cross-border trade level, it gets a little more complicated. Maybe Australia and Singapore do have the policies that support, but the country you're trading with, maybe it's a China, maybe it's in India, maybe it's a Rwanda, they don't have a comparable policy or a like-to-like policy, which makes the trade lopsided in terms of risk. So I'd say my two big takeaways for the mass adoption of what Effie just talked about, and as a representative of a trade portal that can support this, is let's get our SMEs more educated. If we have to handhold every single trade, it's just too expensive and won't scale. Second, let's have open, frank dialogues with policymakers to say, give us a policy that supports this so that we can scale this, we can accelerate the rate at which cross-border trades happen in our economies. So perhaps I'll take a pause there. Hopefully, I've brought you back
No,
some
but
time.
these are great points, and I'm actually quite positively surprised that our conversation so far are moving not necessarily into the technological novelties, but we're touching on very important points. For example, openness to cultural diversity and multiculturalism, as David mentioned, that kind of global outlook. As you pointing, education from the point of view SMEs, clear policies. These are very important elements that need to be sorted out before we can move with technological adoption. Now, what is done? What has been done in terms of, for example, education? Because that's the kind of area which we perhaps share in efforts. Would you like to share, your experience in other countries, how that education of SMEs, what that looks like?
Unfortunately, for this particular topic, which is the use of digital currencies for payments, we haven't seen any mass education effort done anywhere, right? We've only seen it done in pockets. So the strategy that seems to be adopted now is, let's have a few successful use cases, which then we can talk about, and that sort of brings in a little more, a few more people to participate. Is there some sort of a program that we could all as community members come up with together, like a standardized teaching module or even a free module that's available for them, similar to what Effie just showed us? A very simple flow chart saying, look, this is how it actually works. Here are the risks. Something as simple as that could solve for this fear that a lot of SMEs would have, because SMEs are family-run businesses. They represent 95% of the world's global economy. They might take a risk to trade in Bitcoin or any other kind of stablecoin even in their personal capacity. But that same person would be risk averse if they had to apply it to their business. And that's a very key behavior that we need to recognize and respect. How do we make them confident enough to use the same technology in their business lives?
That's a very good point, and I think that maybe in the near future you will see a little bit more coming from our platform. We're working on education modules exactly for that purpose. So hopefully there's going to be great opportunities for collaborating. Now, you also kind of highlighted the work with regulators and international institutions. How do you approach them? Because I could imagine, it's not that easy for a startup or a business to just say, "Hey, a central bank or government, would you like to work with us?" How did that work come together with some of the leading regulators, institutions? Would you like to share some of that with us?
So I think, Andre, you'd be surprised at how forward some regulators are,
Are they?
where they themselves are thinking in certain countries on how can I get ahead of this problem. But we're finding more commonly is a lot of central banks and financial market regulators have what we call sandboxes,
Correct.
or regulatory or product sandboxes, which is a safe environment for you to go test out a product. So say you have a product such as you want to do a stablecoin exchange, or you want to launch some sort of a new method of payment, which is sort of just about skimming the boundary or pushing the limit on current policy. You go and tell the policymaker that, look, I want to try this out. It's new technology. Your policy hasn't really kept up with this. Can I explain how this works? And can I test it and show you? And if you ascertain per your framework that this is not adding risk into the economy, can we go ahead with it? So we are finding regulatory sandboxes popping up everywhere. Interestingly, they are popping up in places you would least expect. Africa has several, ASEAN has several. So we find that the economies that are willing to leapfrog, that are willing to adopt newer technology first and not go through that same curve that everyone else did, having regulators do the same.
That's a great news, and I'm very glad you mentioned the word leapfrogging because that's exactly what's happening. Many of the nations are completely leapfrogging the ancient financial system that we still have, and they, by doing so, may be actually ahead of many of the developed nations, which is great. It brings a little bit of balance to the global economy. Thank you so much. We'll probably have many more references with the following speakers. That's going to be Xiao and Belle, who will also refer to your project. Thank you so much for being with us. Those who are familiar with our events, Aparna and Proxera were here with us during our last conference in March at Western Australia Web3 Association. We hope to see you in future. And let's maybe have a few comments and perspectives from Dr. Xiao Zhang from Zcloak and Ample Fintech, and Bell, who will share with us their experience, which is more of a technical experience from Dr. Zhang and from Bell, more kind of legal experience and perspective on what we've heard previously from both Effie and Aparna. So we kind of have a more complex view of the whole process. So, Xiao, would you like to start? And share with us your maybe if you would like to share maybe some of the whether we could keep it a simple structure for the conversation, your with the benefits or the challenges that you see in that process for SMEs. If you would like to highlight them from a kind of technical perspective, that I think that'll be great. Thank you.
Yeah. Thank you, Andrew. So my name is Xiao Zhang, founder of Zcloak Network and co-founder of Ample Fintech. So basically, we're focusing on several fronts in Web3 and privacy preserving DID and also ZK technology, for all kinds of private data protection applications. So at the Ample Fintech, what we do is to try to facilitate global trading using blockchain technology, and we have been collaborating with the IMS here in Singapore and also with the Proxera and using AODD, a lot of things that we have been doing. So I think I want to echo a little bit on a topic that you just talked about. It's the education of the blockchain technology. That has been a long time issue. I think that's a lot of students to be educated. A lot of people wondering what blockchain is really about, but there is no or very little formal education people can get today on this topic. So maybe we can go a little bit back in the time. So I do remember there was an article in the Economist magazine a long time ago that says what is a blockchain, telling people that the blockchain is a trust machine. That's basically what we are doing here, right? Facilitating trust in global trading environment using the blockchain technology. That is what we're doing, collaborating with the Proxera in the MAS project. So basically, in the global trading environment, companies will find it difficult to trust each other, right? Who am I dealing with? What is the track record of this company? Is it really registered in this place? How many goods have it sold before? So all these questions that the people will ask, there needs to be some answer in a trusted way. But traditionally, we have to do that in a paper and a pen fashion or using some digital document, which can be easily fabricated. So that was a huge problem. And also for SMEs, small and medium-sized enterprises, if they want to raise to borrow some money from banks, for example, and it's very difficult to prove the track record of those companies. So they have a problem to raise fund from banks. So the starting point of project DSFT, as mentioned by Professor Li, is that we want to create a trust environment for companies to do business. And we are anchoring the real world identities of these companies on chain. So establish a tamper-proof record of those companies' identity that cannot be changed, but can be easily tracked and verified by everybody publicly. And we also put trusted credentials on chain stating the qualifications of these companies, proving the business that they have done, like the fund they have received. So all these things will form a collection of record on history of a certain company. So when we are dealing with a new company, you can easily find the history of trading that this company has done. And everything is on-chain, transparent, can be checked and verified by everybody. So this will increase the trust in this process. And turning trust in with a digital form has another benefit that it can be used in the interoperable way with other instruments on the blockchain, such as a smart contract. I'll give you a quick example. So in the DSFT project at phase 2, what we have started researching and making prototypes is something that we call purpose-bound money or programmable money. That's a concept proposed by MAS. That means the transfer of money now can be programmed for a certain purpose. And real events that happens in the real world, such as the goods have been shipped from one port to another, or it has been received by the receiver. All these real world events can be made into trusted credentials, which can be again passed to the blockchain. And if they are consumed by a smart contract, for example, the fund of this trading can be released step by step, maybe at the very beginning 30%, in the middle 30%. So the release of the fund can be made in a programmable way when it's coupled with the real world events that takes place off chain. So this makes it very powerful for people to do business, because now everything is automated, and you have this trusted events from real world that can help the release of money to, I think this will short make the trading time and also the procedures a lot easier and shorter for the buyers and for the sellers. So yeah, so at the third phase of a project DSFT, what we are doing is as already mentioned, Effie already mentioned, for AUDD stablecoin is a lot easier for the traders to make the trade happen, instead of using wire transfer in banks. So using stablecoins like AUDD, and in Singapore they have also their own version of stablecoin called XSJD. What we are experimenting right now is to facilitate FX on chain actually. So people from different countries use their own version of stablecoin, and the stablecoins are exchanged on chain according to the real-time rate that is available to buy stuff and to sell stuff. So a lot of interesting and I think innovative concepts are being experimented in our pilots with MAS right now. So yeah, we really hope the results from this pilot project can really help people globally who are doing trading, especially the SMEs.
Xiao, that's I think if I can follow on that with a question or comment, sounds like a very exciting piece of information for a small, medium-sized business for doing global trade. That means I can use my Australian stablecoin, the Australian dollar, and transact with someone from Singapore or another country, and I can send that in real time. The transaction takes place in real time when the conditions are met, or even if it's just a transfer, it takes close to no time, or it's real time, right? It's almost instantaneous.
Yeah, 1 or 2 seconds, I'd say.
So the transaction goes for 1 or 2 seconds. And how much does it cost?
Depends on which blockchain you're using. If you're using blockchain with a very low cost, like layer 2 of Ethereum or chains like Solana, the cost will be limited to 1 or 2 US cents per transaction.
2 US cents,
Yes.
regardless of the amount.
Yeah.
Now, this is quite amazing. I do a lot of work travel around the world, and I have family and friends around the world, and the transactions look very different when I use traditional financial infrastructure. For example, a recent transaction with Singapore was sending a couple of $1,000s from Singapore to my bank in Western Australia, not to name any banks. It took us 3 days to complete it. It took us first several days to figure out the special codes for the corresponding banks, but we finally did it. But the transaction took 3 days, and it cost us $50 altogether. So I know maybe it's not a lot, but if you do business, that takes a lot of money. And now, in comparison to that, you have transactions that take place in almost no time, just a couple of seconds, and cost fraction of a dollar.
Yes.
That is a revolution, isn't it?
It is, I think. And there's a latest concept in the Web3 industry that is actually called PayFi. So we know payment is a very big industry. And when you use stablecoin to do that, the money that you have on the blockchain, some of money you're not using at this moment, for example, that can generate a yield for your company. So a lot of financial instruments and also interesting products can be coupled with the stablecoin payment concept to help SMEs to do business in a very easy
So
way.
you're saying that there's also financial tools that can help me make some passive income or a form of investment that then so I'm not using my money they sitting there in account, but that could be used in some other DeFi product or service.
Your own money sitting idle in your own account that can earn yield for you already.
That's great. And what's the percentage? What's the yield?
Well, according to what I understood, you can get like something like 3%, per year.
3%.
Yeah.
Okay, it was better than nothing. This is based on stable coins. I see these are great innovations and solutions coming from that space. And the great thing is that we're talking about regulated technologies and innovations that are being tested within jurisdictions that allow for that innovation within the sandboxes. So it's not some sort of Wild West, so to say, environment where there is high risks. We're really trying to help small and medium-sized businesses and their governments and innovators like yourself trying to work together to make that happen. Now, since we have that kind of incredible innovation that you mentioned on the particular example, why don't we have more of that? And why doesn't it happen faster? What do you see the main challenges?
Yeah, I understood according to the information I got, from banks, from institutions. So big organizations are always quite careful when making new things. And innovations, as I have seen them, almost always take place from very small companies. So you have innovative ideas, you experiment them on the market to get feedback from customers, and you know whether you should keep doing this or not. And when it comes to banks, what I understood is the banking system, all the software, database, auditing, everything in banks have been built on top of the SWIFT protocol. We know that's how what banks use to exchange money among banks and doing all kinds of business. SWIFT system was a legacy system that has been built very long time ago, and it has been built using a very different idea as from blockchain today. So it will be quite difficult, I think, for these large institutions, to do things in a completely different way, to throw away everything they have built and adopt a new technology. I think it takes quite some time for them. In the meantime, we have seen innovative ideas, to do things that SWIFT can do. So without asking these large institutions to change everything, or in some cases, they don't need to change anything, but still use blockchain technology to help to facilitate like SWIFT Telegram interchange between banks. So there are some interesting things taking place, but I think for large organizations, it's just going to take some time for them to adopt these new things.
Yeah, the transition will take a time, but one way or the other, the technology is already available. It has been tested. It works, and that's a great news. Most likely, those who are watching us now will likely use some of those technologies, even unknowingly in the background, to do their global trading transactions. But learning that firsthand from our speakers, I hope that it brings you great chills that we're going in a great direction that can allow our businesses, small and medium-sized businesses, save money, make trade and global trade especially more effective and efficient and trusted. And that's very much what's needed. I would like to move now to Belle, who thank you very much for the insight. I hope you can stay with us for maybe if there's some questions. By the way, if anyone has questions, please type them in Q&A. To Belle, moving to Belle to give us maybe some of the legal perspectives on and your observations from participating in those projects. Would you like to share that with us, Belle, please?
Yes, yeah. I just want to add on to say we live in Australia and we can feel now, and every transaction, everything we buy now, there's surcharge fee, there's a cards fee. It used to be absorbed by the merchants, now it's absorbed by the consumers, one way or another. It's about 1.5%. If it's overseas transactions, if I go overseas using my Australian card, it costs a lot more. So I'm not saying necessarily the banks are making a lot of money out of it, but it is truly like a fee, a cost to the banks as well, because this is how much the reconciliation costs, right? So especially for SMEs, if you are doing business, cross border. I would see, I've known people, the traders in Australia, the exporters, they've been using USDT, they've been using a form of stable coin because the benefits being arrives instantly. It saves them a lot of money, cost saving, yeah. So, so I think eventually we'll get there because of the benefits, especially cost saving aspect, and the speed of the transaction. But currently, I think it takes time because of the regulation issue. We're not talking about a simple product. We're talking about we're innovating money. So that's why it takes longer. Yeah.
And what were your observations based on the experiments and the pilots that you have observed and participated in? The different approaches that different regulators around the world take. Where does it position Australia, for example, in comparison to other nations? How we go about it? You kind of alluded to that earlier at the beginning of the presentation. Would you like to expand on that a little bit more?
I'm my profession, I'm a litigator. I'm a disputes, I do disputes resolution. So one area I can certainly comment on is ASIC has been taking actions, prosecuting some financial products, used to be Web3 financial products. So in my view, they've been very thorough. There are several cases, and ASIC's track record so far, it's not winning every single case because for some startups, crypto companies, they do have a proper defense when it comes to how they operate the business. What I'm trying to say is, from my perspective, there's two ways of making new laws in a common law country. The first way is through regulation. That's why I think in the new laws coming, I know they've done consultation papers, ASIC, Treasury Department. So that's coming. But then the other way of making new laws is, how equity was made. It's about, you can innovate, you can start a product, and then it can be done through, through the courts. So currently what we've been seeing is ASIC prosecuting people, accusing them misleading, deceptive conduct, or they've created a product without financial license, whether it's a debenture, if it's a debenture, then you need a financial service license. Did you have a license? So that's ASIC prosecuting. But then I would perceive down the track when people doing business together in an ecosystem, there might be disputes, So what if we lose money through a DeFi platform, So this is not so relevant to SMEs today. I'm conscious of that. So what I'm going to say, what I plan to say to SMEs is, so the project we did in Singapore and the other project we did in Australia, the RBA, the CBDC pilot program, I think this innovation, Web3 can help SMEs. One is in the credential space. So I think Proxterra and Xiao, Dr. Zhang just mentioned about the identity, the credential space. So how you can trade with counterparts, from developing countries, and then knowing that they're genuine because, So that's something can be done through blockchain, because blockchain means, trust, and means immutable, immutability. So this is one thing for SMEs. We're very privileged in a developed country not to worry about credential, the cyber crimes now, but how we can resolve credential issues, for SMEs confidently entering into contracts with counterparts overseas. That's credential. That's something can be resolved hopefully through immutability and on-chain technology. The other thing is what's close to my heart, is enforceability, because I perceive there'll be smart legal contracts down the track. So sometimes can be coded, and then if it can be coded, and then it's through programmability, of the nature of the blockchain, and then there's atomic enforcement of certain things. Because I've seen people doing investment, or people enter into contracts, SMEs, or investment, or lending money in that kind of scenario. So currently, there is no you have to bring a claim, you have to go through the court system. But legally, it's all very pedantic. But how the technology can assist the people, saying this is the assets, this is the money, how they can be lumped together through programmability, and then for enforceability down the track through the technology. So this is way too early, but this is one thing I'm saying I perceive in the blockchain. This is how blockchain can assist with people doing business, to bring more certainty and to have more enforceability if should there be any disputes down the track.
Okay, it's a good way of highlighting the more important outcomes, not necessarily focusing on blockchain what it is, but what it brings: certainty, trust, accountability, transparency. And these are wonderful outcomes we would like to have in economy, in any trade. And if we could have that trade on blockchain, then we kind of, in a way, already have those great expected and desired qualities. The challenge is, yes, as you mentioned, and we've heard it throughout the presentations today, that on the one hand we have those great experiments, as some of those you participated. We have the innovation, we have the great innovators, both in Australia and Singapore and other places, but the regulations are not quite there yet to allow mass adoption on the one hand, and we also need a little bit more education on the other hand. So hopefully we can, by conversations like this today, help advancing that digital space in terms of education, public education, awareness of those technologies, but also viewers and small and medium businesses trying to use it in a safe way, but also maybe put more pressure. I don't want to say pressure, maybe it's not the best word, but ask their local members of the parliament and politicians to engage in those conversations, push a little bit harder for the innovation, because in the end, that's what we need, that kind of public-private engagement and conversation to advance the space. So thank you so much, everyone, for sharing your views. I'm just wondering whether someone from the audience would like to ask any questions through the Q&A. Thank you, Bill, for the nice summary at the end. I'm just seeing if there's any. We have the chat, the formal chat, unfortunately disabled, but I'm not sure if there's any questions in Q&A. Anonymous, what kind of compliance is appropriate within the Web3 trade? Do you check what kind of commodity or service has been purchased through using any crypto or stable coins to ensure legal compliance? And what country law does it follow? So yeah, which jurisdiction, which regulations apply for in international trade? It's a very good question. So is there a way to check what is being traded? And if there's a dispute, which regulation applies? That's a very good question. Who would like to answer?
Sorry, I'm just trying to understand the question. I think it's about compliance. I'm
Yes.
trying to understand, so what kind of compliance is appropriate within the Web3 trade? So are we talking about commodity trades or exchange? So commodity or service, okay.
I think I understand that, whether we can see or the regulators can see what is being traded. I think that's or purchased using this stable coins.
Oh, I see. I think the question was if you use your USDT to trade, to buy, to sell or buy, commodity or service. So, what country? I think again, this depends on this. This is my area. I would say this is my area. This is depends on the contract we're talking about. If we're talking about real life trade, so if you are trading with a counterpart overseas, so you have to nominate your jurisdiction, and I think it's that country of jurisdiction you have to start proceedings either for mediation or for court proceedings. Um, and even if you trace, you use this, I use the USDT to trade. I think it's still something can be treated as any money to be pleaded if should there be any dispute. But in terms of compliance, I mean, there's a gray area of people just, if you're not going through proper channel, proper platform, not going through KYC, AML, of course, this is a bit of problem nowadays. There is there it is the problem, but we work with Proxterra, we work with StreetX. They do have to do very strict KYC, KYB onboarding you before you can start any trade. So it's up to you, if you just want to use decentralized wallets to trade with your counterparts, which of course, it cannot be, there's a compliance issues out there. Or alternatively, you can use proper platforms, like the case we did in Singapore. They do KYC.
So use regulated platforms, those who do KYC, and anti-money, all the kind of regulated platforms that have the requirements, and there should be no problem then.
Yeah, but again, like I said, even if you run into trouble, say, okay, there's a dispute coming, I think you can still go to, in Australia at least, you can still prosecute your case.
Of course, we're not escaping the legal system altogether, right?
Yeah, of course, and I'd be more than happy to take any of these cases, and then because if it should be treated as any money, you use, whether the AML may be another issue, but if we run into any problem, and if you're talking about compliance, it's another issue. But if you use the money to do trade, and if you run into trouble, it can still be resolved through the court system. Don't be, yeah.
Correct. You're not left alone. That the traditional legal system can help you.
Of course,
Now we have another question from Wes. That's a question for Belle. Can you share with us a recent non-financial smart contract which has been executed locally in Western Australia and considered legally binding? Are you aware of any of those kind of non-financial smart contracts? What blockchain was it on, and what was the use case scenario?
A non-financial smart contract which has been executed. Well, I'm not aware of any executed locally in Western Australia. I'm based in New South Wales.
Wes, maybe do you know any you would like to share?
What blockchain was it?
I understand that we're talking about areas of SMEs and trade.
I'm not aware. The short answer is I'm not aware, but I would love to take notes of your question. I'm more than happy to do some research to provide an answer for you. Yeah.
Yeah, I think just because of the nature of the legal framework, to my best knowledge, I don't think there's any SMEs that are engaging in those kind of transactions using tokens or smart contracts. Although there are some companies that use blockchain as a DLT in the back end, but they operate within, for example, traditional financial systems. So the blockchain technology or DLT could be used as a backend, but it does not require or does not involve cryptocurrencies or any other forms of tokenized assets. So that kind of use of DLT has been processed within Western Australia. There's a couple of cases in global trade. There's a couple of cases where our colleagues from UWA helped participate, help build those kind of technologies for known businesses in provenance tracking, in DLT, and they use blockchain technology in the back end. Um, Yes, and they comment, yes, good answer. Shows we are very early. That's correct. Yes, we are still very early despite all these years and conversations. And I understand that many of us who sit in this bubble of blockchain technologies for a long time feels like it's never ending. It's been for a long time, but perhaps for the mainstream, it hasn't happened yet that we use it on the mainstream. And maybe it will happen in a way that most people won't be really aware that there's blockchain technology being used in the background. That's what seems to be happening.
Yeah. Yeah.
Mhm.
I'd like
Yeah.
to connect with, and also I've been working with a blockchain platform. So they are trying to raise money for mining companies for early stage exploration through smart contract. So they build up the platform and then people can invest through crypto. But then there's a legal structure that we helped them to set up. They are Western Australia based. I think it's a good project. It's very early stage real assets tokenization. A lot of exploration along the way. Yeah.
Okay, we have one more question from JP. Are there any specifically SMEs focused associations or organizations in both Asia and Western Australia that can be brought into this conversation? Any questions to our participants? Bill, I believe maybe on the East Coast there's more engaging and dominant conversation in the space, more active ecosystem. Any SMEs focused associations or organizations that you know?
So our law firm is going to join RegTech Association. So predominantly, I think it's SME tech-based business, the technology space, but they want to know, but it's either a technology to enhance compliance, to enhance regulation, or it's in that space. So RegTech Association. For organizing both Asia and Western Australia.
There's various associations that are like ours, for example, Western Australia Web3 Association or Blockchain Australia, now uh, Digital
Economy
Economy
Council of
Council. Yeah,
Australia is
so
tech
there's
hub.
various associations that are peak bodies for the industry. They obviously focus on the innovators and on advancing that space from the legal point of view, from helping to understand the technology. I'm not sure whether they are focusing explicitly on SMEs. But there's other associations, on the other hand, that focus on SMEs. For example, in Western Australia, we have the small and medium-sized business corporation. So there's traditional organizations that focuses on SMEs. What we're trying to, I think, achieve is to bridge the SMEs associations, which are oftentimes government agencies and or not-for-profits, with that knowledge space that comes either from universities and associations like ours, and form that kind of dialogue. And this conversation today is an effort in that into this direction. But yes, JP, if you know anyone who is in that space, please bring them. And that's
Effie,
the whole purpose.
Effie,
Yeah.
yeah, Effie, do you know any association in that space?
Which particular space, sorry?
So
So as SMEs
yeah.
associations that deal with the kind of questions that we're talking about here today.
No, look, and DECA DECA, the Digital Economy Council of Australia that you both mentioned a minute ago, are going to be focused more and more in that industry sector, but they're partnering with people like the Institute of Public Accountants to present to the accountants, who are the people who are dealing with
Right.
SMEs, for example, right? And financial advisors in the financial sector. Specifically in SMEs, no, look, Vic Trade, Austrade do sort of play a little role in that, but not somewhere else specific that I can think of at the top of my head.
Yeah. Yeah, no
Yep.
formal organizations. From
No, I don't think so.
informally, that's what we've been trying to do through our events and conferences in Western Australia. So, um, but that's not a formal name or representation of SMEs, but more of a kind of way of reaching out to SMEs in as a way of educating. But yeah, that's a good question. Have any other questions and comments? So if no further questions and comments, thank you so much to our great guests who still are with us, Belle, Xiao, Apana, and Effie. Earlier, Professor Lee, who already left. Thank you so much for your time. I am aware that it's dinner time soon for most of us, or past that time in Eastern on the East Coast. If any of our attendees would like to reach out to our speakers, please contact them either through myself, through WEB3, which you see here on the website. This is the kind of our platform for connecting with SMEs, with the blockchain space, Web3 space in Western Australia, and in the broader APAC region. Thank you everybody from the from University of Western Australia and other guests who are participating in the event of APAC Family Businesses. The main event is tomorrow, so please join that if you're interested in that. If you have any further comments and questions, please share them now. Otherwise, I think we can call it a day.
Thank you.
Thanks so much, Andre. Thank you.
Thank you,
for
Andre.
organizing.
Thank you too.
And on behalf of Donella and the organizing committee, thank you, Aparna, Belle, Xiao Chang, Effie, and Professor David, and Andre, especially for putting in all this effort for Web3. My name is Pishan Seet, so I'm from Edith Cowan University, and I'm working with Donella on this. She apologizes she can't be here, so I'm just going to close this off. And thank you for the 10 to 12 of you that have stayed out through the whole session, and all the best in your Web3 journey. Thank you.
Thank you very much, and we have that as a recording,
Okay,
so
bye.
anyone
Have a
can.
good night.
And you have some
Bye-bye.
certificates coming to you for the speakers. Thank you.
Thank you very
Thanks
much.
so much.
Thank you.
Okay. Have a good night,
Okay.
everyone.
Thank you.
Thank you
Bye-bye.
very much.
Thank
Bye-bye.